Hi, this is Brent from TradeGuild.blogspot.com, and it is September 6, 2006. Market closed down pretty nasty today. Common held belief is that we're seeing profit taking, which is pretty reasonable considering the nature of the rally recently and the strength of it. There's another thing to consider, I think, though, and that is the Labor Department report that came out today with Q2 productivity, which was raised higher. And in there, the unit labor costs also rose 4.9%, which is quite a bit stronger than expected, and it leaves the year-on-year increase at 5%, which is the largest increase since 1990, and it is only happened twice at the 5% level in the last 20 years. It's significant because the market really started this whole rally out on the assumption that we've turned the corner on inflation and that rate hikes were a thing of the past, more or less. But this is significant inflationary pressures because the unit labor costs account for 2/3 of total business spending in the United States. So it's significant driving force behind inflationary pressures that businesses will pass along to their consumers. So whether or not the Fed takes this in stride or it becomes a sticking point for concern and perhaps leads to another rate increase, it remains to be seen. But certainly I think part of today's action was discounting that report. So anyway, yesterday we had a post called Overbought, and we were looking at the market, and it was a widely held belief that we were overbought. But what was kind of interesting was we had this doji day, as you can see here. It's actually a little star in the Dow Jones, and this suggests a loss of upside momentum. We had a couple days over here with some, but that was on a breakout from a flag, so we weren't too overbought at that point. Now we're getting a little bit overbought, a little bit extended, and there's that doji. So we were looking for a pullback, and that's what we got today. I don't think we were expecting quite as much as we saw today, but it was pretty nasty day all around. Oil got hit pretty hard, and I'm going to pull up the oil holders index, oil service ETF, and as you can see, it has rallied up to this downtrend line here around 142 and just fell apart again today. So you could chalk it up to a lot of things, but to me it looks like that downtrend is still pretty much in effect. Let's take a look at the actual price of oil, and I have been saying for a long time, or last couple weeks, that I thought we would see crude oil pull back to $67 a barrel. Now here's light sweet crude oil, and what we're seeing here is this long-term uptrend, which is a pretty healthy uptrend. You can see how far it goes back, and we're kind of approaching that level. So we were up around 74 a couple weeks ago, and we were talking about this 67 level being breached, more or less, or being tagged. And here's that red trend line over here. That's at about 66 now. I think by the time price gets down, we're going to be at about $67. So we'll see what happens there, whether oil bounces off that, which I would probably expect at least some bounce off that just from technical buying alone. I'm going to pull up another chart here for you, and this is Valero Energy, and look at what happened here with Valero. I mean, it has just melted down the last couple weeks here. So this is one of the leaders in energy, and it looks really bad. I mean, it broke through that 200-day moving average. The volumes increased down here. So, are we seeing maybe an end to this run in energy or in oil? Who knows? But there's a potential bounce here to play, and there's a potential short here to play. So we'll have to see, how this sets up. One more thing I want to pull up. Let me see if I can get the symbol right. Okay, and here's the steel index, the Dow Jones Steel Index, and there's that downtrend line. And yesterday we had the big run up in commodities, and it broke through that line more or less on increasing volume. But today it is down almost 3%. So long term, I'm still kind of bullish on. Bearish actually on commodities and steel in particular. There's a couple charts I'll show you later that focuses our attention on that for some short setups. A couple other things I wanted to show you. I'm going to pull up a Warden breadth indicator. I always hate saying that word. It never quite comes out like you intended it. And here's cumulative volume index versus the S&P 500. The volume index is in white. The S&P 500 is in red. And I've been saying that I expect the May highs to be taken out on this whole summer rally premise of a 9.3% rally being, the average rally, which takes us from the June low up to the May highs in the Dow and the S&P. But I said, after that, I have some concerns. And this is one of the things that I'm concerned about. This index, as you can see, is kind of, if you just look at it from this point forward, it's in gear. We have the highs matching up with the highs, more or less. But if you kind of step out and look at it in context of the bigger price trend, and you see the April and May highs over here where price was, where the index was, and then you look relatively where price is now compared to back here in March and April, look where this cumulative volume index was, up here around 52,500, and now it's down here around 45,000. So short term, we're in gear, but long term, we have this divergence, which suggests to me that we might have a little trouble once we break that May high. Maybe we're going to pull back for a little bit before the fall winter rally. One other thing we're going to take a quick look at. It's another Warden indicator. Let me see if I can get this one up. Okay, here we go. And this is percentage of stocks trading 2 standard deviations above their 200-day moving average. And again, we see the same type of thing here. Short term, we're in gear with these higher highs, like the trend is. But then when you go ahead and you zoom out and you take a look at it in context, we're quite a bit lower here. So you can actually see the indicator making a low downtrend while price is rising up. And, you can look at, where we were in this area with the indicator and where we are now with the indicator way down here. So there's some stuff brewing here. I think there might be a little trouble on the horizon, but we'll just have to see how it plays out. These kinds of divergences can go on for quite a long time, in fact many years, so it's not necessarily something that is actionable right now. I have a couple of minutes here in this video. Let's look at Luminex Corporation. And I wouldn't quite call this a flag, but it's kind of like a miniature little pennant forming here. It's a consolidation formation, and it's down 1.65% today, so it's pretty much on an even keel with the market. But it looks good. It looks like it's holding up here, and we saw this big spike in volume with the move, so that's a good move. And now it's pulling back on lighter volume into this consolidation formation up here. So it's one to keep your eye on. It's showing some relative strength, I think, compared to the market. And it's medical instruments and supplies. And actually, I've seen a couple stocks in that group have a pretty good day today. Let's move on to Shinsei Kato's pick from the tag board. Check out our tag board. Lots of very good ideas going on there. And this is HH, which is Hooper Holmes Specialized Health Services. And we've been talking about this one since back here in July, I think. That's a big symmetrical triangle. It's going to break out, blah, blah, blah. There's the breakout. Very nice. Pulling back a little bit today. And sometimes, these things will pull back to their breakout point, that pivot point there. I don't know if it's going to pull back that far, but if we take a look at let me see if I can get one up here, a 10-day moving average, maybe it pulls back to that 10-day moving average around 315. So that's one to keep an eye on. I've got about 50 seconds here. Let's pull up one more. This is VVUS, which is Vivus Inc., Medical Instruments and Supplies, okay? Look at this day it had. Now, this is a long pick that we've had on the blog for quite a while now. Actually, I had a video on August 27th and August 30th. It's up 8% today against this market. So we've been talking about this one for a while, and it looks pretty good. I'm going to come back with about 2 or 3 more longs and about half a dozen short picks. So stay tuned. We'll be right back.